This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back. Hope you had a great Memorial Day weekend or holiday if you celebrate and have the time off last week. There's a lot to cover, but I'm going to try to be brief. The markets are rocketing off of the reversal from the initial announcement on Friday of EU tariffs that were supposed to start June 1, but on Sunday, the news came out that it was being pushed back to July 9th. That is the only reason that we are reversing right now. So markets continue to rocket higher or reverse higher on hot air. I do want to just make sure you are all also aware of international developments in the JGB or the Japanese bond yields. They are continuing to go higher. So that is a protest of the irresponsibleness of whatever powers that be over there on what they're doing with their own homegrown inflationary problems. But for those that don't know, one of the largest liquidity sources for the U.S. and macro market in general is the yen carry trade. That's basically Japan and their powers that be agreeing to crush their home currency. Everyone goes short the yen, and they borrow cheaply with that money because they know everyone else is going to just keep crushing it. And then they export that and go long risk assets. If the markets force the yen to rise and the markets force Japan to stop supporting the yen carry trade, that's going to unwind a lot of positions very quickly. However, on the flip side of the yen carry trade, you still have this passive investing going on, right? A collection of employee stock purchase plans, buybacks, 401ks, mutual funds, all consistently buying Mag 7, SPY, QQQ every 2 weeks with paychecks that all of the Silicon Valley workers globally are earning. It creates a constant bid in the market. So that's kind of the macro of what's going on. Keep in mind, this weekend was a holiday weekend. Last week was a holiday week. It's very rare to have seen a sell-off or crash during the lead up to Memorial Day here in the U.S. And guess what's right around the corner? July 4th, with more travelers hitting the road and hitting the airports. We can't have a recession or prices falling into that. That's peak travel season. We need these dumb consumers to spend. So we'll see what happens. But right now, it's a bullish impulse. Let's go through the top line numbers. We had 496 new highs on the NYSE, 85 new lows. Obviously, here it's skewed to the upside. 79% of stocks advanced versus 18% declined in the NYSE. 30% are below the 50-day, and 52% are below their 200-day. Bullish session across the board.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not your advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.